I'm excited today to do this one because it's going to be focused on, obviously like how to really enter alerts the right way. And I feel like that's something that, we have so many new people on the team, and a lot of you maybe haven't seen trainings like this where we can break down exactly what you're doing and step by step look at how I can mentally look at an alert and within 20, 30 seconds have it entered with full risk management kept into account, and like just knowing everything that you got to do. So we're gonna go over that today, and like I said, I want to see you guys dropping some screenshots in the chats to get some more people in here. But more importantly, I'm glad that you're here because at the end of the day, you're the person that determines your success, right? And you showed up. So we're gonna go into, first of all, actually, before I even go into the real training, I want to show you guys something that you should be leveraging a lot if you aren't already. Let me just log in first so we can go into the. I love the new website, how it looks. By the way, it looks so good. Okay. I'm going to share one section that I want all of you to utilize. It's something that I actually, I think within my first year, I had gone into this already. And honestly, it blew my mind. And we don't have, or I should say, better said, what we have now compared to what I saw when I first started in this specific section actually has changed a lot, quite a lot. And the videos are so much better. So let me see if I can go ahead and screen share this. What's up, Daniel? We got Caleb, Juan, my brother Hevish in the car, Edwin, Michelle, Matt. Glad to see you on as well. Cool. Okay, so I'm gonna share my screen. You guys should be able to see this. So the first thing that I wanted to go over before anything else, it's Money Pro, and the reason why I go over this is because I've noticed now more than ever, especially with people, certain questions that I'm getting, especially now that we're planning trips. A lot of people really need this. So we have the cash flow quick start. These first 4 videos, by the way, already, if you watch these first 4 videos, your mind will be blown completely just because of the information that it has. And you guys can see there's a lot of different things here. I never say there's such thing as quick money, but there's actually a video on quick cash, which is really funny. And Money Pro is a tool that I want all of you to leverage, because as much as we can do trainings on, how to invest properly and how to make money, if I help all of you, and like the platform iGenius really helps you make a lot of money, the last thing I would want is for you to be a broke person with a lot of money. You understand what I'm saying? So a lot of people sometimes they make a lot of money, but they don't know what to do with it. Even that applies to anyone, by the way. Even people that have a lot of money today, what do we say? Good results reinforce bad behavior. Sometimes people with a lot of money think they know what to do with money, but they actually don't. They just know how to make a lot of it, but they don't know how to maintain it. So watch in the next 5 years, see what happens to their income. So there's a book called The Debt Freedom System as well. And all of you, I actually had a campaign 2 years ago with this team before we were even called GC champions. We had a campaign where every single month of the year we went through a chapter, and it was really cool. So as you can see, there's 12 chapters for 12 months, but the chapters are very short, so you guys can go ahead and read that, and we have it in French and Spanish. Tips and strategies: housing, transportation, credit cards, student loans, insurance, entertainment, communication. You guys can learn how to really strategically set yourself up so that you're not losing money, or you're capitalizing on these different things. I think a lot of you probably didn't even know this existed, but trust me, little things like this, like, are you spending too much money on gas? Are you following the proper rule when it comes to financing a car? Credit cards, how are you achieving a higher credit score? What is your credit right now? Can I apply for other things that will help me have more leverage of the bank's money? A lot of things that people don't know. Then we go into money media, like buying a car, your house and your money, vacation spending, Christmas, newlyweds. Like, it's so specific. I hope you understand this. Like, for those of you now that are on the business side, okay, and you're like, oh, I want to talk more about what we do. I hope you realize what we do is a lot more than just Forex and crypto. We're talking about real financial literacy. And this is something that a lot of people need. So for those of you that know anyone that could benefit off the system that we have, definitely refer them to this, because just off this one section alone, people can make and save a lot of money. Okay. But so how many of you knew that we had this extensive like material in this section? Did you guys know this? Did you guys know that we had videos on how to buy a car, how to plan for vacations, how to plan for traveling, transportation, credit cards? I don't know if a lot of you knew that. And if you didn't, now you know. So definitely great tool to leverage, 100%. So what I'm going to do now is going to go ahead and log. Actually, I'm already logged in, but I'm going to share my screen and we're going to go over. If any of you have seen the training of mine, it's the very first video on the Champions University YouTube channel, and it's mastering the trade alert. So I'm going to remaster that pretty much now, and we're going to go over it again. Except now the difference is we don't use MetaTrader for obvious reasons, right? It's not even in the App Store. Or is it in the App Store still? Even if it is, you can't really use it. But a lot of you are using different things. Some of you are using TradingView. Some of you are using CTrader. Some of you are using the demo applications native to the brokers themselves that some brokers have. It's, it's really about figuring it out, but it's all the same. And the most important thing is that you're approaching these trades the right way. Because as I open this, I want to share a story with all of you that you probably don't know about me, or maybe some of you do know about me, and my backstory with trading. So when I first started with trading, I started with $1,000 of borrowed money. It wasn't money that I actually had. And I had to ask my parents for money. I don't know if a lot of you knew that. My first $1,000 that I put into my trading account was my parents' money, wasn't my money. Okay. Because all of the money that I had, when I say I had $200, $300 to my name, I wasn't kidding. Like I spent all my money on the membership startup, because we only had one package at the time, and I think it was $250 or something like that, or $299. But I started with $1,000 that wasn't mine, and so of course I was already tied emotionally to that money, and that was a bad, situation to be in. But in my first 2 months, I actually hadn't really done anything, because I knew how to enter trade alerts, and I made a couple $100 really quick. It was like quick cash, and that's how I advertised it, which is the wrong way to advertise it. If you guys didn't know that, please don't advertise it like that. But 20-year-old Christian back in 2018 did not know better. So he was making some money. It was the first time he was making money on his phone. He was excited, and he was saying all kinds of madness about it on social media. Now, when I started making a bit more, I was like, well, I have a strategy. And guys, my strategy was just copy paste blindly. It was not, had no risk management, had nothing. It was just enter 0.10 for every trade and hope for the best. And unfortunately, it worked out. Why do I say unfortunately? Because good results reinforce bad behavior, right? So I made a lot of money. From $1,000, I took it to $5,000 really, really quick. And it was so over leveraged, you wouldn't believe, but I was just so lucky that in that span of 2-3 weeks, after I really started to use real money, the trade alerts were hitting crazy, like really, really, really good. And so we barely lost. And so I made a lot of money really quick. And I was like happy, I was over the moon. But I realized quickly, as I started to go on my road to 10K with that first $1,000, that I was doing everything wrong. And so I lost. I remember my biggest losing day was like $2,000. And the reason why some people, you can have a lot bigger losing days in Forex trading for sure. But for me to see that at 20, it was pretty tough to see. Then as I kept moving forward, I learned, I'm like, you know what, Christian, you were not doing anything right. So of course you were losing money, right? Like, of course it wasn't working out. And, you were in the negatives after. So I went back down to $2,000, and I implemented a real strategy after that. And that's where I made my first $10,000 in Forex. And I was only trading Forex. I had money in crypto. In crypto, I put, what's it called? In crypto, I put money into Ethereum and Bitcoin very early on. I didn't buy a whole Bitcoin, obviously. The Bitcoin was $5,000, which I didn't have. Obviously, I didn't have that money at the time. My Forex account, I kept very quiet just because I was kind of scared, and I didn't want to get like bad karma by just like showing off to everyone. So I kept it very quiet. And later on, I reinvested that into crypto. But as I started to make more money in one market, I diversified my portfolio into others. I'm a holder of NDAO as well. As you guys know, we have NDAO, which is we're a wholesaler of NDAO, which is great. And a lot of different things like NFTs. When NFTs came out, I was able to put money into that. So why do I share all of this? I share it because I want you to understand that really knowing how to enter the alerts is going to be in your favor always. But more importantly, you'll make money that you can now reinvest into other things. And that's the best part, because you don't want to diversify $100. Some people are like, oh, I have a diversified portfolio, and they got $20 in Ripple, $20 in their Forex account, and $20 into BlackBerry. I don't know. Like, that's not a good, I don't care. It's $100 at the end of the day. You want to diversify with a lot of money. Okay. So focus on one, make the money there, and then put bigger amounts into other into other like into other markets. That's how you want to do it, right? That's definitely how you want to do it. So we're going to start today off with Forex, and that's going to be the main focus of today's training. It's going to be Forex. The reason why I have a soft spot for Forex is because it's like the first market I ever got into. It was the first market I learned. And honestly speaking, I think learning this market properly and how to trade in it helped me learn how to really apply that into other markets as well. And personally, what I like about Forex is that you have leverage. It's also a downside, but if you know how to use it to your favor, kind of like the banks, right? You can use the banks to your favor, or you can choose not to. It's the same with leverage. And you got to know how to play the game. So with Forex, there's a few different things. Obviously, you're going to get a trade alert, right? And so I want you guys to tell me, if you've been trading, what's been your favorite channel so far that you've been using alerts of? Let's see. IOTA, GC Nitro. What else? For just Forex, no binary, no crypto, just Forex. IOTA, that's the only one. Usually the most popular one, to be honest. GC Gold, yeah, it's a very risky one though, right? For our people with bigger accounts. So wait, what did everyone else do? Let me see. GC Gold, demo account Meta 5 made 3,100 profit from up $1,500 in new trade today. Just based off the sounds of that, I feel like you're probably over leveraged, but I mean, that's good. But hopefully this training gives you some insight into how to really trade. Because trust me, profits are great. Profits are great, but profits can blind you. So we're gonna go into a trade alert, and I'm gonna take one of these IOTA trades over here, and we're gonna go into one that was sent earlier. So it is USD CAD. We're gonna go into this. So it's gonna be a step-by-step system. So what do I look at when I'm receiving a trade? Okay, I'm gonna draw it out a bit differently than I have in the past, because I usually get to this step later on. But we're gonna get to it right away. I'm just gonna copy and paste the alert onto the screen so all of you can see it. Okay, so this would be an alert that we were sent, and this actually is a real life alert that they gave us. Okay, so there's one. I think there's 7, but let's see exactly. There's 7 different things to look out for. Number 1 is the currency pair. Okay. In this case, the currency pair is the US dollar Canadian. Now, what we're dealing with here in Forex is a bit different than what we would deal with in stocks. In stocks, you have a singular asset. In Forex, you have 2. We call it a pair for a reason, right? It's a Forex pair. There's 2 things involved, which means 2 different governments, right? 2 different levels of inflation, 2 different economies. That's the most important thing, because you're dealing with 2 different things moving at the same time. But it is a ratio. You understand that? It's a ratio between the 2. That's what you're seeing on the screen. So sell at 1.34, blah, 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 1.34, blah, 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 all the way down to the bottom. These are ratios. This is the exchange rate. So $1 US, right? So our base over here, and then our quote. Base. You don't really need to, this is just being extra, pretty much. The base currency, it's just good terminology to know. The base currency is the US dollar, and the quote currency is the Canadian dollar. So I know that at the moment that this alert was sent, which was here, when they say sell at, the at is the market price at the moment they sent that alert, okay? Or they're telling you to enter the trade when it hits that price. It could be one of the two things. So 1.34610. What that means is that for every US dollar at that moment, you're going to get $1.34 Canadian, which is actually quite a lot, right? To my Canadians, it's actually quite a lot. That's the US dollar is much stronger at the moment, apparently. Usually I see 1.25 to 1.3, not 1.34. Soon we're going to end up like the Japanese yen or something. But that's the currency, right? That's the exchange rate. So every US dollar is going to give me $1.34 Canadian, but we're looking at smaller numbers. So first thing we're looking at is a currency pair, right? Number two. Second thing is going to be the order type. Is it a buy or sell? In this case, team, what are we looking at? It's a sell, right? So we're already given the answers. It's like we're given a puzzle, but we're given a lot of the pieces together already. So currency pair, we don't have to analyze the market. So keep in mind what you're paying for with iGenius is access to things like this. Because normally, if let's say I grab Axel, I can see his camera over there. Let's just say he's trying to analyze the charts on his own. He's going to have a watch list of certain currencies or currency pairs that he wants to trade on. So his watch list might not be USD CAD. For him to get to some pairs, it's going to take him a while because he's looking at his 5 main pairs, but he's not looking at this. But in this case, with these currencies, with the traders, they're sending you a whole bunch of different things that you can invest in. So the currency, I don't need to figure out. The analysis is done and I'm sent what it is already. The second step, is it a buy or a sell? I'm told where the market is looking like it's heading. I'm going to sell. Number three, take profits and stop losses. So what are my take profits and stop losses? So if you don't know, here. So let's just say we're looking at a market like this. In this case, it's a sell, right? So what's happening here, the exchange rate, I always symbolize with an at, so it's the current exchange rate. The stop loss is a number where if the market went in the other direction and bounced up, instead of losing your whole account up here, they're going to cut you off and say, this is the stop loss number, so I'm protected, right? Don't enter trades without protection. Okay, this can be applied to other things as well. So now we move on to the take profit, right? The take profit is very important. We're looking for profit targets, right? So now with profit targets, I got to look at how am I going to make some money? Now, realistically, when you look at a chart like this, am I making money on the way up or on the way down? Most investors are like, oh, if it goes up, I'm profitable. In the Forex market, it's a bit different because you can actually make money on the downtrend as well, right? We can make money off the bulls and the bears. It doesn't matter. So take profit 1 is here. Take profit 2 will be even lower because that's more money. Take profit 3 is the final target in some cases. Some people like doing a fourth one, but those will be the profit targets that you're hitting. Okay, so when you're analyzing the market, so you understand, traders are looking out for these targets. There's different zones that they're looking at because they want to see where they're going to be profitable as investors. So at what point am I risking a certain amount? Because if it hits, let's just say I'm entering a trade and it hits take profit 1, I know that the odds of hitting take profit 2 over take profit 1 is always going to be lower, right? I know if I win the trade, in this case, I'm going to always hit take profit 1, but I'm not guaranteed that it hits take profit 2 or take profit 3. Does that make sense? Give me a number 1 in the chat if that makes sense. If you're winning a trade, you're always going to hit take profit 1. You understand? But it might not hit take profit 2 or 3. That's like, it's like you're not gambling, but you're just pretty much hoping that it gets there based off your analysis. You're making an educated decision. But obviously, the lower the target, the higher chance it's going to be. So you're given these numbers already. The good thing is you don't have to, as an iGenius member, you don't have to analyze the market to figure out these targets. They're given to you, okay? Now, the next thing I got to look at, which is where we get a bit more, this is like intermediate level stuff now, where we're going to do calculations and all that. But pips, What are pips? Can anyone tell me? Has anyone been going to the iGenius University or Market Pro? What are pips? Some people that are maybe under a year in here, under 6 months. Let me know. Fourth number movement. Yes and no. Yes and no. I see where you're going. You're technically not wrong. In some cases. Any change in price? Yes and no. Small price movement? Yes and no. I'm asking what a pip is. Points in percentage. That's what I hope you know that's what it stands for. A pip is a point in percentage, or some people say percentage in points, or percent in points. Some people say like that too. What that indicates is a small movement in the currency pair. Yes, they're fractional almost, but the decimal place that it occurs in is different based on what currency you're looking at. It's not the fourth in every case, although in most cases it is, definitely. So what Matt was saying is true 80% of the time, I'd say, because you're looking at currencies where that'll be the case. So here's what you got to understand about pips. There's 3 cases. There's most, and then there's 2 exceptions. Number 1 and number 2. In most cases, the pip is the 4th decimal place. But we have 2 exceptions to this rule. Does anyone know what it is? One of them is the Japanese yen. Yep. Actually, I'm going to put A and B so you don't get confused, because what I'm going to get to on the next part might confuse you if we're looking at numbers. Okay. Japanese yen. What's the other one? Anyone know? Anyone but Edwin and Ovi and Abid and Joseph if they're here. There's one more exception to the rule, and this would be our friend gold. XAU is gold. If you guys study chemistry, you know that AU is the periodic symbol for gold. And these are 2 exceptions to the rule. Okay. Japanese yen, the pip will be on the 2nd decimal place. In situation B, you come across gold, which a lot of you love, but it's very high risk. It's very volatile. You're looking at the 1st decimal place. That's where it's a bit different. So in this case, with the US dollar to Canadian exchange rate and the alert that we received there, is this, or which instance is this? Most Japanese yen or gold? Which scenario are we looking at? Is the chat broken, or it's most. So look, here's how you guys figure this out, okay? So if you look at the currency pair, I'm spotting 3 things, okay? Confused with the question. It's all good. I'm just playing, guys. I know how it is to be on the other end of the screen when you're not really sure about what the person's talking about. I'm like the last person. I would be back in the day the last person to ask questions, because I'd be like, oh, I'm just gonna wait for someone else to get it wrong before I do. But trust me, just get yourself just answer the questions even if you think they're wrong. But USD CAD. So I don't see a Japanese yen and I don't see gold. So I automatically know that this is going to be the first case, right? If it was USD JPY, then I know, okay, it's not going to be most, it's going to be Japanese yen. So why is that relevant? It's relevant because I need to calculate my pips a certain way. Now, here's a bonus tip for all of you. So we have pips and we have something called fractional pips, okay? Fractional pips are also called baby pips. This is how I know it, baby pips. And what you do, like the baby pip is actually the 5th decimal place, or it's the decimal place after the pip, okay? So in this case, because we know that this is the most, scenario, most cases, I know that my pip is going to be what? It's going to be the 4th decimal place. I'll give you another example after if we have time. If I know that, then I'm going to look at my sell number, my exchange rate over here, and I'm going to look at the 1 because we're looking at 1, 2, 3, 4, right? It's the 4th decimal place. So the 1 is my pip in this case. What does that mean? What is the 0? The 0 is my baby pip, right? The fractional pip. So it's irrelevant really for us, to be honest. It's irrelevant for our trading purposes. But that is something to note because a lot of people tend to get confused and they think the pip is the last number when actually in many cases it's not. It's just that you have to keep that rule in mind because a lot of people, you wouldn't believe, a lot of people have lost a lot of money just not knowing that one simple thing. Because entering the alerts itself is, yeah, it's fine. But when people are calculating pips, they end up just like, messing up the numbers and they're like confused and a lot of mistakes are made. And we don't want those mistakes to happen. Okay. So for our other situations over here, we can technically just erase the 5th decimal place. Okay. That would make it a lot easier. So I want all of you mentally, right? I want you mentally to get rid of all these zeros. Or it could be a 5, or it could be a 7, or it could be a 9, or it could be an 8. It could be any number. Any number after the pip is a baby pip. So the 0 is, yes, the fractional pip movement in this case. So now we're looking at 4. This makes it a lot, it's nice and easy now to read it, right? You're only looking at the pips now. So you know that the last number in this case now, because we eliminated all the zeros, are just the pips. So, okay, cool. What I want to do now, number 5, is risk management. The first part of that is knowing your take profits. The higher the take profit, the lower the percentage of hitting it. The lower the take profit, the higher the percentage of hitting it. Just a general rule for all of you. If I'm given 3 take profits, the higher that the one that I pick will determine, what I'm kind of looking at as far as my risk. So if I'm picking take profit 1, we recommend that for beginners because if the trade is winning, we're hitting take profit 1. If you pick a higher take profit, like in the first case, then the chance of hitting that isn't bad. Obviously, we pay these traders for a reason, but it's going to be a bit lower because now there's more room for the market to fluctuate, right? So that's a key distinction. So take profits is number 1. The next step is now looking at pip calculation. So what is my risk to reward? Okay. And we're going to go into something called allocation and lot size after pip calculation. So what do I do with pips? Now that I know what pips are, this is my risk. We're going to look at my risk, okay? And we're going to look at my reward. By the way, if you have any questions along the way, I don't mind answering them. Usually we keep them till the end, but I know that if we wait till the end, you're going to just not retain the rest of the information after the point where you stopped understanding. So if you want to ask questions, then feel free to ask them. Oh wait, so I missed this. So the 0 will be the fractional pip movement and the 1 will be a full pip movement. Is this correct? Yeah, that's exactly what I'm saying. That's good. Okay, so the risk in this case would be the stop loss. So the stop loss I'm looking at, so the risk, how we calculate it, this is entry price to stop loss. It's this difference between entry price and stop loss. The reward is the difference between your entry price and your take profit. And I'll put question mark here because it could be any of the take profits. This is like a simple formula. So my risk calculation is going to be what? My entry price versus stop loss, right? So in this case, what was my entry price again? let's see if I can test you guys a little bit. What was my entry price in this alert? $1.34610 exactly. Good. So we're looking at this. So that's my entry price. And we're going to look at so in my risk, the what we're looking at is the stop loss. So it's 34.61 versus 34.91. I'm going to ignore the zeros and the fractional pips, all that stuff. What I do, you can subtract them, sure, but then you're going to get 0.003. What's easier for some people, that because a lot of this is like, oh, if I'm good at math, will I understand it? Or if I'm bad at math, will I not understand it? Here's how we avoid you being not the best at math. What I like to do is I like to do this method. And it's crossing off what's common. Right, this is a method that I would like to say I invented it, but I'm sure someone else probably did it before me, but I'm the first one that I saw do this. So we cross off what's common from the left to the right. Okay, that's the rule. And in this case, I see the ones are common. So I'm going to cross off the ones. Now I look at the threes. Are the threes common? Yes. Are the fours common? Yes. Now we hit a roadblock because the 6 and the 9 are not the same number. So now what I'm comparing is 61 versus 91. What's the difference between 61 and 91? I see Matt with the camera. 30, right? So my risk is 30 pips. Make sense? Cool. So we did that by calculating the difference between the entry price and the stop loss. Now we're going to go to the reward. And this is now, remember how I put TP question mark? Now we have 3 options. So we're going to have to calculate the difference between the 3 of these. So I'm going to undo. Oh, actually, I'm not going to do that. Let's not do that. Okay. I'm going to do the same thing, but we're going to compare our entry price, which, like Michelle said, is 1.3461, and TP1. 1.3431. So you see how this helps if you draw it on paper. Like my assignment to all of you is when you're entering alerts, have a trading journal where you can write this down. Don't use a phone. Don't use just use pen and paper. Let's go old school with this and write down the alerts and do this yourself. You can obviously, like when you're going into trades, you know what take profit you're probably going to pick. But if you're having trouble making the decision, knowing your risk and reward will help you a lot. So maybe write this down, do this same thing, and then you'll, at some point, even if you're bad at math, you'll be able to start doing it in your head. Okay, I've seen people do it. I've seen people that have literally failed out of like my math classes that joined this platform and they're able to do this with their eyes closed. Like it's happened. It's the number stuff. It's just patterns. That's all it is, right? Once you see a pattern, you recognize it. Okay, cool. This is what it is. So take profit 1, difference between that and the entry price is what? Let's cross off what's common. The 1, 3, 4, roadblock. There's no difference between 6 and 3. Or sorry, take profit. Yeah. So 61 versus 31. What's the difference? What's the difference? 30. Exactly. But now we're 30 in reward, right? It's a bit different. We're not 30. It's technically, if you wanted to say it, it's minus 30 for the risk, but I wouldn't say that. Just keep it 30 risk and 30 reward. Which, by the way, and I know my traders in here will agree with me, that stop loss is a nice stop loss. Like it's a nice one. Like it's not too risky. Some would say it's kind of small, but I know IOTA in the past used to have stop losses of 100. Edwin, you remember that? They were consistently 100. And when you have huge stop losses like that, technically it'll take a lot longer for the stop loss to be hit, which is a good thing. But once you hit a stop loss, like if your take profit 1 was only 20 pips, for 1 loss, you need to win 5 times, and that's not really in your favor, right? So this is a lot better. I noticed they've been changing their setup a little bit. So take profit 1, 30 pips. Now take profit 2, we're gonna do this faster. If you guys can beat me, definitely do that. So 1.34 is common. So now we got the difference between 01 and 61. which is a nice even 60 for take profit 2. So this is 1, 2, and then we're going to go look at 3. And number 3 would be 1 point, oops, let's make that red. 1, I guess we're going pink. All right, it's okay. 1.3, and then difference between 461. This is where we get a bit bigger. 461 and 361. You're looking at a difference of 100. So the good news, the very good news, is that even if you pick the smallest take profit, you're at a 1-to-1 risk to reward. That's in the trading game. That's really good. Okay, really good. Some people like having a bigger risk than reward because they just base off their strategy. But for a beginner, this is very beginner friendly. 1-to-1. Now, if I'm going to take profit 2, now my reward to risk is going to be 2-to-1. If I go to my 100 pips, take profit 3, my reward will be 10/3, which is like 3 point something. So you're looking at over 3, right? Over a 3 risk to reward ratio in your favor. So knowing that, this would be a safe trade to enter as a beginner. If you see 100 pips and your take profit 1 is 20, that's a channel. If they're like that consistently, I wouldn't recommend that for beginners. If you know how to, if you're going to monitor things and you know how to adjust stop losses and all that kind of stuff, then by all means, but this would be a good one. Okay. Does that make sense to all of you? Also, you guys know that these sessions are recorded. So for our amazing members of GCC, you know that you can always watch this back in case you miss something or you have questions. You can always watch it back. Trust me, I had to watch over trainings like this like 10 times because for some reason, as good as I was at math, I couldn't understand the concept of trading. It was so backwards, but I just couldn't understand it. So if you don't get this right away, don't be discouraged. It'll make sense later on. Okay, now we're going to go into what this means in English because pips are great, but I want to know what this means in dollars because let's just say Daniel has like a $500 account, but Dakota has like a $2,000 account, and then Edwin comes in with like a $10,000 account. We don't know, yes, it's a universal language of pips, but we don't know what that difference is in dollars, okay? Unless we have something called the lot size, or some people like to call it, I still call it allocation number. That's what I like. So I'm going to go over here. So I'm going to name this section. This is our last section. It's called money, question mark. So we have the allocation / lot size. How do I calculate this? So are all of you familiar with the apps for demos for trading and also real accounts? You understand how when you enter a trade, you're going to see that decimal number under like the currency pair, right? So you'll see USD CAD. That I know the format can differ, but you'll see 0.01 or 0.02 or 0.3 or 0.5 or 1.0, 5.0, these numbers that we see on these trading apps. That is your lot size, right? And how you determine this number is through a formula that is very, very, very good, okay? And we actually you could create your own chart with all these different things. So my account size, so let's do lot size, equals account size divided by 10,000. So throw me 3 different account sizes. I know I named them, but I want you guys to pick. Give me 3 different account sizes. $1,000, $15,000. Let's go with a smaller one now. So I'm gonna pick a smaller one. 100. Okay. CO 15,000. So look, this is what it's gonna be. Okay. We're gonna do the 3 calculations. It's gonna be 1,000, 15,000, and what was the other one? So people are saying 100. Good. We like the ambition. We like the ambition for sure. 1,000 divided by 10,000. Quick math is 0.1. 15,000 divided by 10,000 is going to be 1.5. 100 divided by 10,000 is going to be 0.01. Now let's do a couple different examples so that you understand how a pattern forms. If this were to be 2,000, it would be 0.20. If it were to be 3,000, it would be 0.30. I think Matt said 5,000 earlier. If it was 5,000, it would be 0.50. Do you see a trend in the thousands? Yep. Now with the over 10K accounts, same trend. If it was 20,000, so I put 20K, it would be 2.0. If it was 30K, it would be 3.0. If it was 50K, it would be 5.0. You see another trend forming? Yep. Same thing with the hundreds. If it was 200, it would be 0.02, 300 would be 0.03, 400 would be 0.04. So now we have a chart here where if you actually just screenshot this, you'd know based off any account size, what the allocation number / lot size would be. Okay. But there's another formula to calculate money. This is just something so you know how to enter your trades. By the way, I treat this to this day as a daily budget. So if I have $1,000 account, does it mean I'm entering every trade at 0.1? No, definitely not. Definitely not. Even if I know what I'm doing, that's very risky. What you're doing that is splitting it. So if I know that my trading routine is 3 trades a day, I'm going to divide my $1,000 or 0.10 allocation in 3. Can it be divisible by 3? Not really, because it's 0.333333333, which we're not going to work with. You can't really put that as a number. What I would do is, let's just say I'm entering 3 trades a day. 3 trades a day. I would do 0.04, 0.04, and 0.02. Or I could do 0.03, 0.03, and then 0.04. You see what I'm saying? So it's like a budget. You have $1,000 to spend for the day. It's not $1,000 that you're spending, but you're dividing it into a daily budget. And that's good. That's safe trading, right? It's safe trading. You want to make sure you're doing that. Okay. This is risk management in a nutshell. Now, the next part is money. Let's go back to money again. There's a formula for dollars per pip. So what we can do is we can turn these numbers into dollars. So you know exactly how much money you're going to win or lose for every trade. Does that sound good? How much would you be spending on those 3 trades out of the 1,000? Are you referring to, okay, so this is where knowing your allocate. So this is where I think it'll make sense the dollar amounts now that we're gonna see it. Like under 500 from it, you'll see exactly what it's gonna be. Because what those numbers aren't saying that you're putting in $500 to a trade. Again, remember that this is leverage. So you're never putting in. So if you put 0.04, you're not putting in $400. It means it's risking an Okay, cool. Can you guys hear me? Nice. All right. So, as we were saying, so when we look at the risk to reward, you see the screen. Cool. When you see the risk to reward, what you're going to be doing is calculating that in terms of dollars now. All right. Now that I know the pip amounts and now that I know the dollar amounts, if I have $1,000 account, let's recap again. We're going to be at 0.10 allocation. That's the first important number. And we know that this is the second important number, which is $1 per pip, which is our dollar value. Okay, now if I'm doing 30 pips times $1 per pip, if you guys remember from math class, you cancel out units. So we're canceling out, let me do a different color for that. We're canceling out the pips. So now we get $30. So if I am entering a 0.10 allocation, what I'm risking is $30. So Matt, you see how that makes sense? I'm sure a lot of you had that same question because now I know. So if I were to divide it 0.04, 0.04, 0.02, you know that the total risk in those trades will still equal $30 because if you're entering trades that have this stop loss. Okay. So that's what you have to understand. So when you figure out, you see how you put in a 0.1, which technically is $1,000. It's not like you're gambling, you're putting $1,000. You're trading in accordance to $1,000 account. With a 30 pip stop loss, you're going to lose only $30, which is a good, it's 3%, which, you know, I think once you lose that, then you can decide if you want to be in and out, continue on your trading day or however you want to do it. This is why having daily trading goals is very, very important. Okay. Now with the reward, it's the same thing. If I do 30 times $1 per pip, it's going to equal what? Same thing, $30. If I do 60 pips times $1 per pip, it's going to equal what? $60. Here it's going to be $100. So the numbers aren't always this nice. They're this nice because I picked $1 per pip. If I had done, let's say, 50 cents a pip, 50 cents times 30 pips, you might be a bit confused. It's not 50 times 30, it's 0.5 times 30. Okay. 0.5 because you're going in dollar units. So $0.5 per pip. So to give you an example in an alternate universe, right? So we're looking at this. We're going 50 cents times 30 pips. Same thing, you cancel out the units. What's 30 times half? So your risk would be $15. So now you understand, if you were having a smaller account, you're going to lose less. You're going to lose less. If you have a bigger account, you're going to lose more. Conversely, in my reward, my risk or my reward will be higher if I'm playing with a bigger account. The smaller the account, the smaller the reward. So if this principle makes sense to you, or maybe it doesn't, if you understood a little bit, and now you take this information and you apply it and you learn it and you practice it, when you go into trades, you'll know exactly what take profit to enter. You'll know how much you're going to be making and losing off the trade, and you'll be able to place the trade within 30 seconds and go about your day. Okay. Why so many steps for entering? And what I heard was copy paste. Well, it's not copy paste. You got to look at it a little bit more. You got to look a bit deeper into that because you want to be a safe trader, not just a trader. Okay. You want to be a real safe trader because the reason why people lose a lot of money in investing and trading is because they have no idea what they're doing. Here you're paying for guidance and you have it. You have all the education. You have the resources like Champions University every Tuesday at 7 p.m. Eastern time. And you have mentors as well that can help you out with certain questions. So now that we finished all of that, so we're going to recap again. Let's go back to the beginning. Step number 1, look at the currency pair, figure out what it is. Step number 2, am I buying or am I selling? Step number 3, I have take profit numbers and stop loss numbers. These are what they are. Step number 4 is look at the pips. Using the pips, go to step number 5 and calculate your risk management. I know if I have a higher take profit, there's a lower chance of hitting it. There's a lower take profit, it's a higher chance of hitting it. Pip calculation. My risk is entry price to stop loss. My reward is entry price to take profit, right? We calculate those numbers. And using my allocation, lot size, and the dollar per pip value, I can find out how much I'm actually winning or losing. Okay? I'm going to find out how much I'm winning or losing. So that should all make you successful in mastering the trade alert. This is why I call the training that specific thing. And the last thing that I'm going to leave you off with as we approach the hour is my 2 laws. Okay, the 2 laws of trading. Law number 1, don't be greedy. Period. Right? And law number 2, don't be emotional. These 2 things will kill you in trading. The reason why is being greedy is on. It means when I'm winning, I can't. It's like gambling. The thing is, this is calculated under strategy. With gambling, yes, there can be strategy, yeah, but at the same time, for most people, it isn't. So I think that's the funny thing. The difference between trading and gambling, it's actually very similar. But there's people that always make a lot of money in gambling, and there's some people that make the casinos money. You understand? So it's like that's exactly what the market is like. The market, there's few people that make money in the market. Why? Because there's few that actually take the time to learn the strategy. But the rest of the people are what make the market, very profitable, right? That's why the banks make a lot of money. So don't be greedy. If you're winning, don't continue the winning streak. This isn't Call of Duty, please. There's nothing like you don't need to continue the win streak. Just close your laptop, close your phone, right? Just continue with you made the profit, just be happy with it. Set daily targets, have a profit target for every single day. If you hit 20 pips or 30 pips a day, that's a great day for you, because in a month you're making, let's just say, off the 5 trading days that there are in the week, 5 times 20 even, right? 5 times, or sorry, 20 pips times 5 is 100 pips. 100 pips for 4 weeks is 400 pips. You're making roughly a 40% return on your investment in a month. Imagine the bank promised a 40% return in a month. Imagine, like, people would be lining up for days. So you see, even playing small, what most people think is small, actually yields a high return. So don't be greedy. Number 2, don't be emotional. When you're losing trades, I think Ovi said it, don't revenge trade. That's how they get you. Is you're like, oh, I lost that. Okay, here, I'm gonna double up and sell. Then when you click sell, the market goes in the craziest uptrend that you've ever seen. And then you're like, okay, cool, I'm gonna ride the uptrend. Then you press sell or you press buy, and then after the market goes down. So like, just don't play that game. Don't be emotional. Have a strategy. That's just my number 1 tip, is have a strategy. This doesn't mean have a technical trading strategy. It means have a alert entering strategy. So like, make sure that every single day you have a target. You know that once it hits this, you're going to pull out, even if the trade is going on. I've had cases where I had like 5 trades open. 2 of those trades were losing, 3 of them were winning, but in total I was at a net plus 30 pips, and I would close all the trades. I'd even take the losing ones because I know that I hit my target. So a lot of people are like, oh, I'm losing this trade, I'm not going to close it yet. If you hit your target for the day, just end it there. Okay, that's what it is. So take the L, close the phone. Yeah, exactly. You hit your target still, because it's possible for you to have losing trades but still be in the positive. So that is the major thing. If you missed most of this call, or if you got on late, or for the people that aren't on, this is probably the most comprehensive, full-on like deep dive into entering alerts that you'll get. So I think the last time I did this was, like I said, the first YouTube video that we ever had on the GC Champions channel. This is the remastered version. So I hope you guys really took everything from here. And if you have any questions, feel free to ask. I'm just going to stop the recording.